thanks to the government of India and to the regulators, including the RBI and SEBI.
GIFT City is quite an important development for India.
Huge amount of interest from distributors within GIFT.
This opportunity of GIFT is only for NRIs.
How you can actually undertake the entire fund management activity sitting in India.
How prepared is GIFT City in giving a boost to India's financial sector? We have on the panel representatives from key stakeholders of the GIFT City ecosystem. GIFT City was conceptualized as an quote-unquote offshore financial hub. One of its key objectives is to attract foreign capital chasing Indian assets, which otherwise are routed through popular financial centers like Dubai, London, Singapore. So, however, developing an ecosystem ground up is a long drawn process. And let's ask Dr. Dipesh Shah, how has been the progress so far? And can we say, has GIFT City truly arrived?
Thank you. At the outset, I must thank the Business Standard for having a very specific session on the GIFT City itself as a part of the BFSI Summit. And as we were discussing before coming in, that there is a lot of interest in GIFT in terms of setting up the fund or banks or other areas. Let me just quickly give you a journey and where we stand, as you just asked me. I think GIFT started with the concept of, can we pull an international financial center in India? Why people have to go to Dubai, Singapore or Mauritius to do India international business? So it started on a very important problem statement that people were going out to do India business and we were exporting business and jobs outside. As a concept, I think it looks very good. But when it comes to implementing, I think that's the challenge, you know. The challenge is you are creating an offshore center within onshore India. And as we know, India is not full capital account convertible, which means that you are now converting a full capital account zone within India, which is outside the foreign exchange laws of India. And from a regulatory perspective, I'm sure people sitting in this room would appreciate that it's not an easy task under a regulatory system to call a center or a zone outside of foreign exchange. But I think thanks to the government of India and to the regulators, including the RBI and SEBI, that they did visualize that India will need this type of a financial center in order to ensure that we build something, an ecosystem which is closer to India, creating jobs and creating business onshore India. What has happened in last 8 to 9 years and where we stand in this journey? From 129 firms which were licensed by the previous regulators, which means that RBI, SEBI and IRDA between 2015 and 19 licensed 129 firms in the IFFC zone. Post that, government brought in the International Financial Services Center Authority, which is a unified regulator of the zone. As we speak, we are 725 plus firms in that zone. Wow. So in last 4 years, almost 600 plus firms have entered the financial center there. And who they are? You know, they are banks, they are funds, they are stock exchanges, insurance firms, even the players like aircraft leasing, ship leasing. So a wide area of financial institutions present now and transacting huge businesses in terms of volumes. So for example, banks are almost 29 banks with $70 billion of banking asset size sitting in GIFT now. And that has happened in last 4 to 5 years, majorly in terms of the volumes and size. So I would say the concept started as an experiment, but has now picked up the space because the institutions which were going out have now started questioning themselves as to, I don't need Singapore or Mauritius or Dubai to do India international business. I can be in a 50-minute flight from Mumbai in a financial center outside and can still do the same what I'm able to do outside of India.
Absolutely. Thank you, sir. We must commend the regulator IFSC. It has a much broader canvas, and it's given how things are evolving, I think it has a greater role to play in the years to come. We'll come back to Dr. Dipesh. In the meantime, we can ask the other panelists on their operations and the opportunities that they see. You can start with Ganeshan. Sir, BNP Paribas, a marquee foreign bank, has newly set shop there. How has been your experience so far, and what are the opportunities that you see?
Yeah. So, looking at it from a corporate perspective, because we are the leading corporate bank from Europe, Gift City is quite an important development for India. I think starting at a macro level, of course, India is moving to a $5 trillion economy, and, which means we need a lot of investments, across the country. And Gift City is, clearly one of the important channels to bring that investment into the country. So I think purely from a, importance for India Corporate Inc., Gift City is quite key. And as Dr. Dipesh mentioned, 29 foreign banks are already there, and every day we get, a lot of inquiries from our peer banks to say, how's their experience, and we should see that number easily doubling in Gift City. So, so in terms of products, clearly there is certain fiscal incentives which has been given, especially on the ECBs. So we have started our branch in July, but within this short period, we already done multiple ECB transactions from Gift City already. And, we see a very healthy pipeline. We will, of course, be launching a lot of other products as we go along the journey. It's still quite early for us, but the experience has been quite good. And the second aspect is, of course, there are a lot of structured finance which will ultimately move to GIFT. So I think there was a mention of aviation. So clearly, India is going to be the largest aviation hubs globally for growth. I think, between Airbus and Boeing, the largest orders are today between the two Indian airlines. So they have all opened their hubs there. BNP Paribas is one of the largest aviation financing banks, and we have already financed, quite a few aircrafts for India via the Gift City, kind of route. I think the third element is of course on renewable energy, because we have seen significant growth in renewable energy requirements in the country, and a lot of the financing for renewable energy is via the foreign route, whether it is ECBs or bonds. And we have seen that, in the last 12-18 months, a lot of the ECBs for some of these renewable projects are coming through GIFT. And also for bonds, clearly bonds which are listed on the IFSC exchange, there is also, an advantage on the withholding tax. So again, we see a lot of bonds for the Indian corporates moving there. So, so I think from a overall, I would say corporate perspective, GIFT is becoming increasingly important. And as Dr. Dipesh said, a lot of what we were doing through, Singapore and other branches are clearly moving to GIFT now.
Thank you, sir, for spelling out the kind of opportunities that banks have at the Gift City. Now let's move to Rahul. Rahul is the CEO of HDFC Life International. Sir, can you share your experience and what are the things that you do at Gift City?
Right. Sammy, thank you, and thank you to Business Standard for this opportunity. Let me start by mentioning that we, from the HDFC Life Group, we set up this entity, which is an international subsidiary outside India. And then we chose to come to Gift City about a year back. So we saw this opportunity on retail life insurance and the whole gamut of life insurance. When I say not just life insurance, it means retirement, pensions. And incidentally, we are also licensed to do health. So very, very uniquely placed in that manner, because very few companies are allowed to do life and health together. So it's been about a year or so, just about 14 months or so. But I must tell you, we are very, very excited about the opportunity that, that the Gift City presents. The diaspora opportunity, the NRI opportunity, which is on the dollar side. I don't think it is available today to those consumers from India. So a whole lot of good plans, life insurance plans are available, for NRIs to buy in India, but they're all rupee denominated. And if NRIs want to look at solutions which are cross-border and which are truly global in nature and they are dollar denominated, then those get possible from the Gift City platform. And that's exactly what we've been offering from day one. We started with one product in about 12 months or 14 months. As I said, we've already launched 6 products. We are seeing huge amount of interest from distributors within Gift, from lots of foreign jurisdictions as well who are interested in, taking these products to their customers. Largely the feedback that we are getting from a lot of participants is that these conversations were not possible earlier to offer dollar products to NRIs, and now there have been some announcements you would have seen in July where even resident Indians can open accounts in Gift City, and therefore resident Indians also can buy products which are dollar denominated or foreign currency denominated. So all in all, we see that areas which were not sort of getting catered to in this space are being offered from us, and there are many insurers who are already setting up, and you will see this space emerging very, very rapidly. We see this as a very large opportunity and multi-decadal opportunity.
That's quite encouraging. In fact, we have a lot of our family friends, abroad, and in fact, now I just came to know that, one can ask them to, look at this as an avenue to, buy life insurance, Let's get in Vaibhav here. Vaibhav, how has been your experience? Can you also talk about your business at Gift City?
First I would like to thank Business Standard for this opportunity to talk on a very interesting, hot topic, I would say, Gift City. Because wherever I travel, the first thing the people say is what is Gift and how we can sort of invest through the Gift City. So I'm sure your readers will sort of benefit a lot by maybe these discussions. So I represent Mirae Asset Investment Managers. We are a Korean asset management firm. We set up our office in Gift October 2023. So it's been more than a year. We actually moved management of one of our funds from Luxembourg. We were earlier sort of just doing advisory of that fund. We are now managing it from the Gift City. Earlier, the AUM when we started this in October 23 was about 150 million. And as we stand, it's about $300 million. I can tell you a lot of people globally when I travel have never asked a question, why Gift? And they want to know a little bit more about Gift. So acceptability of Gift has become quite large. We've also launched an inbound fund in the Gift City in July. And we've, in the first 3 months, successfully raised about $15 million from NRI investors. Interestingly, Dipesh sir, we've got about 25% of our AUM from foreign nationals. So, a lot of times we think that this opportunity of Gift is only for NRIs. But I would like to say that foreign nationals is one of the large opportunity which we can tap. And it's very difficult for a foreign national to invest into Indian markets. But through Gift City, it's one of the most easiest way a foreign national can invest in Indian markets. So I think the opportunity is not only NRIs, it's foreign nationals and foreign companies and how they can sort of invest in Indian markets. And the flexibility of Gift City is high that it also allows Indian residents to invest into global stocks and global bonds. So that's a product we also plan to launch sometime maybe next month, which allows access to resident Indians to also invest outside India. So Gift City doesn't give you access only for NRIs to come into India. It also gives access for resident Indians to invest outside India. So you've got the entire ecosystem that we can create. And the experience for us has been very good, being the first sort of asset manager in India to start this fund. And like I said, acceptability of this product is quite high, especially for NRIs in UAE, Singapore, and Middle East.
Interesting. We as journalists, every week we get press releases which talk about some financial institutions setting shop at GIFT City or expanding operations. So that goes to show the kind of progress the ecosystem is making. Let me get in Kunal here. A lot of fund managers are setting up funds in GIFT City. You as a tax expert, can you just tell us how does it compare with popular jurisdictions like Mauritius, Singapore?
Yes, so, hello. So, first of all, thanks Business Standard for giving us this opportunity to maybe share our experience. I think what has happened traditionally is that if you really look at Indian fund managers maybe probably 10 years back had very limited options on terms of where they can pool capital. Mauritius was at that point in time considered as the most favored jurisdiction to set up funds, etc. Then slowly Singapore came in. And there have always been challenges both from a regulatory and tax perspective in terms of how do Indian GPs set up funds in these overseas jurisdictions, both from a FEMA, tax perspective, etc. And with the opening up of the GIFT City as a platform, it has actually helped multiple Indian GPs to set up platform in a most efficient manner. As if you look at really from a tax perspective, it gives us how you can actually undertake the entire fund management activity sitting in India, right? Because if you really look at GIFT City is maybe an hour away flight from Mumbai and similar from Delhi. So whereas in all the other cases, your funds are in Singapore, Mauritius, in the hands of certain administrators, etc. Here you can actually create that setup in GIFT where you can have the people based there who can manage it. Second is from a tax perspective, what has happened is after all the treaty benefits have gone away on capital gains, if an investor is coming from Mauritius and Singapore, there is a 13% capital gains tax that you pay. Now, if you really look at the investors don't get the credit of that taxes in their home jurisdiction. So what happens is that on the other hand, if a person has set up the platform in GIFT City, then whatever taxes get paid in India, depending upon each of the profile of the investors, they can actually get a credit of the taxes in their home country. Or if there are certain investors who have specific exemption vis-a-vis India, they are not able to claim it if they are an investor in Cayman or Mauritius or Singapore, which they can today claim it if they come directly into the GIFT City platform. So it kind of really opens up avenues for multiple investors to look at India in that positive manner. Their overall return goes up because you are able to save that taxes of claiming credit, etc. So it's become a win-win for both the GP and LP as far as the GIFT City platform is concerned.
Okay, thank you. Sir, I would like to come back to you again. There has been this trend of financial entities wanting to migrate from foreign jurisdictions to GIFT. How has that been progressing? And another area is family offices. A lot of family offices have expressed desire to set shop at GIFT City, but what are the impediments? Can you just highlight?
Sure. I think the first point was that how do we onshore what has gone offshore? And that's where this redomicile law was written, where if you are a fund in, say, Mauritius or outside, and you want to redomicile back into GIFT, because they went outside because there was no such structure available within India. So obviously the choice was to choose from whatever the Kunal would suggest. They will pick up, Mauritius, Singapore, or Dubai. The treaty that was been sold by the consultants were picked up by the by the funds. I'll locate this. And now the same consultant are saying, why you are in Mauritius? You should come back to GIFT. And suddenly the funds are feeling, why did I go out at the first place? Obviously because of the no choice available in India. And two, I think the cost of running those funds outside is so exorbitantly high in terms of even the legal fees itself. Now, if we are in GIFT, the legal fees are in Indian rupees and you are paying to the Indian lawyers. That, I think, is one of the biggest relief that we are seeing in these funds. But to answer to your question, I think the redomicile law which has written has brought in at least 15-20 funds that I know which were located in, say, Mauritius or Luxembourg or Singapore, moved into GIFT seamlessly without any issues of what happens to that tax, what happens to the structures. Everything is moving, quite well. So that law has really helped the funds to move in. The second what you asked me about was the family investment fund. I think this is the topic which everybody wants to, talk about. And what was done by the GIFT was when we did the fund management entity regulation, we said, why you have to create so many structures and different regulations? Why don't one regulation be sitting in one place, gives you flexibility to do multiple things? And the FME, if you really look today, and probably what Vaibhav's license is a full retail license, which means you can run any strategy under that fund. What we have done is that you can run any strategy in an FME, including a separate FIF if one wants to create. Now, the FIF, when they came in, today a third-party manager sitting in GIFT can actually take money from Indian family and invest outside. There's no problem in that. I think the issue was that if the family investment themselves wants to create a structure, that's where the domestic law will come into play, because you are converting Indian rupee to invest into a dollar, and then dollar is going out. So you have to comply with the foreign exchange laws of India, and every structure in GIFT, when the money is coming from domestic in India, you have to comply with the foreign exchange. But a family from outside wants to come and set up a family investment fund in GIFT, there's absolutely no FEMA requirements. You just simply create a family investment fund, invest into India or outside seamlessly. As far as Indian families are concerned, there are two options. One, give a fund to a third-party manager in GIFT, no problem. The OPI and all the routes work seamlessly. You want to create your own FIF, you comply with the foreign exchange law and then invest outside.
Kunal, I would like to come back to you here quickly. There is this overarching fear that, whether genuine flows are getting routed through GIFT City. Like Sir said, whether onshore money is going offshore, and then, so how big is that a concern, and what has been your...
So actually it is not such a big concern. In fact, there are enough checks and balances which is there both from an exchange control guideline standpoint as well as from the IFSC guidelines in terms of what is that you can do and cannot do. And I think the overall interest that we are largely seeing is today there are overseas funds who want to actually access the Indian liquidity which is there today, right? If you really compare today, there's a lot of liquidity in India and people want to tap that liquidity for raising capital, and which is actually largely to invest outside India, either outside equities, outside unlisted or listed equities. And then there is a second piece, which is the more of an inbound side of it, where people are raising capital to access Indian equities. So there is, I would say, very limited commingling that is happening for only few people who may want a combined strategy to say that I want to raise capital, but I want to give a wider bucket of offering to people where I can invest both in India as well as non-India, but that's very limited as of now.
Okay, fair enough. Ganeshan, can you also highlight some of the challenges or some tweaks that you would sort of sought either from the regulator or from the government that could open up more opportunities for a corporate bank?
Yeah, so no, I wouldn't call it challenges because we all understand that this is a evolving kind of setup, and obviously I would say it is stages of development. So I think we are off to a very good start. Definitely on the banking side, there are several opportunities, and I think the number of products will keep multiplying surely. But I think one other aspect that we could see developing is, if you look at a lot of global Indian corporates, like what you can call as Indian MNCs, for lack of a better word, is a lot of them today have their let's call it treasury centers in a DIFC or Singapore, where they consolidate and pool their global operations. So why can't the treasury centers move to GIFT City, at least for the Asia Pacific kind of jurisdiction. So obviously that would need certain rules, regulations to be looked at, in terms of movement of cash and taxation, etc. So I think one is, that could be a big development, which, because once the corporate moves in, that kind of, further is, gives kind of a positive effect to the entire corporate banking setup. And then the second aspect we could look at is, as India grows, obviously Indian stock market will also see a significant growth. We are already today the fourth or fifth largest stock market in the world. And, a lot of Indian companies have looked at either listing abroad or listing ADRs, which I think, ADRs have slowly become less relevant, but, listing abroad is still today an option for a lot of global companies. And, with GIFT, kind of expanding on the equity capital market, that we should also see that, instead of listing in US or UK, why can't, we list in Gift City and develop that as a hub. So I think these are a few development from a corporate bank that definitely we can envisage in Gift.
Thank you. That is interesting feedback. If the audience has any questions, please be ready. We'll just go to Rahul and Vaibhav, and then we'll come to you. Sir, do you have any feedback or any suggestions, that could help insurance companies like you?
I think we've been speaking to the regulator very, very often, and I must commend IFSC as one of those authorities which encourage constant dialogue. So multiple forums. I think in the last 14 months, I think we wouldn't say that we would have dearth of opportunities to talk, on how we can grow this and what we can do better. They're very, very keen listeners, and we get plenty of opportunity. They're very methodical in terms of having inter-regulatory discussions. So whatever points that we need, I would only say, companies should look at it more keenly. Whatever smaller structural issues are there, I think a lot of them are anyway getting ironed out. And as we go forward, and for ourselves also, like what we saw, we had a little bit of trouble in terms of payments and other things. All of them are getting sorted as we go along. So yeah, that's what I would like.
Thank you. Vaibhav, would you like to come in?
Yeah, so I echo some of the thoughts that Rahul mentioned, that, we've got one of the most friendly regulators which are there. And, whenever we meet them, they come out with a notepad saying, tell us how we can sort of improve the system, which I think so is one of the most important things in an evolving marketplace. Just from our experience, I think there are 2-3 things we thought if can be done, and which will be done because it's an evolving marketplace, is that one, like Rahul mentioned, is that payment is a challenge which a lot of NRIs or foreign nationals face when they sort of transfer money to the gift city. And I'm sure, the banking systems and all need to sort of help and evolve to make this easy and seamless for NRIs and foreign nationals to transfer money, to sort of give funds. Second is, a lot of people have acceptability of gift. And one of the things that, if you were to see in this budget was announced that, FME retail or, mutual funds in IFSC also get the same tax benefit as SEBI registered mutual funds. This gives us access to sort of raise retail money globally as well, which is where we'll need support of IFSC to get themselves registered with multiple jurisdictions. And I'm sure they are, very keenly working on that. But as they keep doing this, this will help us get money from a lot of retail investors across jurisdictions. And that will help increase the sort of visibility of GIFT significantly. These are a couple of things that we feel if it can be done, it can make life very easy for investors to access GIFT, and sort of the environment can grow much faster than where we are.
Yeah, thank you everyone. I mean, this is a topic which we can, discuss at length, but given the paucity of time, we'll just throw open the floor for some questions, and then we'll wrap this session.
Hi, I'm Bikram Mehta, representing Lawrence Grant Advisory. Certain questions to Vaibhavji, Dipeshji, and Kunal.
Please keep it short.
Yeah, sure. Single question, but pertaining to all three. Certain things just now Vaibhav already described. What was the, now, if suppose a local investor, retail investor, what you have asked last point, how much is there any cap to invest, minimum or a maximum? Is the gift city allow such type of thing, or is there any restrictions on that? And what will be the tax burden on the investor if he is doing investment through retail, through gift city?
I think one person can answer that.
Yeah, so I can at least answer the first part, and maybe tax is the expert. The question is, like you said, so there are types of funds which are there. So if it's a Cat 3 or a Cat 2 funds, then you have ticket size which is $150,000, which is equivalent to what you have in India, where domestic AIFs need a ticket size of 1 CR. So about 1.25 CR is what is required if you are an AIF structured. For mutual funds, it's just passed in the budget. So I'm sure all mutual funds like us would want to tap this opportunity. So there's no minimum ticket size mentioned, and we can go to lower ticket size of maybe $1,000, $5,000 as well from overseas investors. So it can open a very large sort of avenue for investors. So from India, even if it's a Cat 3 AIF investing outside into global stocks, the ticket size is $150,000. That's a minimum requirement.
I'm very sorry, we are out of time. I wanted to take more questions, but I've been told to wrap this session. I'm sure if you have any questions, the panelists can answer them on the sidelines. So you wanted to add something? Or quickly, very quickly.
So, so also just from a FEMA standpoint, there's a cap of 250K per annum under the LRS thing. As far as tax is concerned, I think as Vaibhav mentioned, it depends on the type of fund. If it's a Cat 2 fund in GIFT, then it's a flow through. So whatever income that the GIFT entity earns, then you are eligible. For Cat 3, it then follows the normal trust taxation, very similar to how a Cat 3 is here. The specified fund regime, which is in GIFT, is largely applicable to non-resident as of now. But for resident, it will be very similar to how a Cat 3 strategy would work in India.
So what would have been a better position that regulator don't have to respond and both the market participants have responded? This means the zone is working properly.
Thank you, sir. I would request everyone to give a round of applause to this wonderful panelist. With that, we call it a wrap.